Hello guys, welcome back to this channel. So let me show you how you can catch this like the one I'm waiting for today. You can get yourself a very nice 1 to 6 risk to reward. So the way I'm expecting this should be 1 to 6. So you can have your TP there, and then you'll be trailing stop losses because after this imbalance you can see there is an order block there. So if you don't want to hold for long, you can move, you can track you can be trailing your stop loss. Like in this case, after this pushback, we expected this to push up. So if you are trailing your stop loss should have been here, because there is no need of this market coming down here unless you want to hold until tomorrow. That is why this strategy is called a swing strategy. So unless you want to hold until the following day, that is when you can have a rigid stop loss like that, and then expect that it will just play up eventually. The problem is that you may be stopped at break even as much as it may eventually play, like in this case. So it has eventually played. And how long did that take? After you saw your profits, how long did that take? That took 1 day 6 hours. So that is why this strategy, I call it intraday strategy. Provided you get it at the right time, you are good to go. So the strategy is very simple, and it has a checklist. So I have two strategies, by the way. I have the trading strategies whose checklists are this, and then I have an swing strategy whose strategy is this, though in most occasions I prefer to trade these swing strategies so that it can give me less trade but quality trades. As we all know that the trading strategy, my strategy gives trade every single day because it is based on 4 hours fractals. So I prefer this because of high risk to reward, and then it gives you less trade, and then it is having a lot of SMC logic. So that is an example of this. As you may be wondering, the best stop loss, ideal stop loss should be here, which is just according to this strategy is entry should be 30 minutes full. Stop loss should be few pips above or below the above 30 minutes candle. This candle that closed here should be here, but ideally safest stop loss should be at this low. So anything around here is good. So ideally it should be here, and you still get 1 to 6. So it should still give you some nice 1 to 6 all the same. You could even hold more. I'm not sure how long it went, but that is why it is called swing, because you don't know for how long it is going to go. So you can hold it more, but that is allowing room for more emotional roller coaster, because you don't know for how long it will be holding. As you can see, this was a lot of emotional roller coaster when you saw your money, and then again you start seeing your money disappearing. But as you can see, it has gone. So there are conditions for holding more. So you can see this was a 1 to 10. There are conditions for holding more, but that one I don't discuss here. This one's here, otherwise it will make this thing look bulky. There are conditions for holding more, and there are conditions for just taking the highs, the daily highs and daily lows. If you've watched my previous videos, I've already explained every concept. So I only trade those two strategies. And now let me get back. As you can see, this went to a 1 to 10, but only if you accept the emotional roller coaster. I think it even went further than that. I'm not sure. Yes, you can see it went further than that. The problem was now the news should have liquidated almost all your profits, but at least it went a 1 to 12. If you are people who like holding large risk to reward with minimal stress, this is the strategy for you. But for me, the strategy says clearly here that at least 1 to 4 is absolutely phenomenal, and then BE at 1 to 3. We don't just rush to BE. Actually, what we do is we place our stop losses, half of it or next to, very close to BE but not BE, so that you give it room to breathe. The trade I am today, it's not moving well. It's really playing with my emotions, but it is above BE, which is still fine by me. provided it doesn't stop me out at exactly the amount of money I wanted to lose. There's no problem, because at least it shall have tried to push some distance before it can come to BE. Though the expectation, according to psychology here, expectation is that you should always be expecting a loss, but when any come, just accept, because when you took the trade, you're already willing to take a loss. So the trade I am in currently is here, GBP card, and this AUD card. So you can see still playing with me. Let me just check. I took risk entry. Ideal entry should be here, but since it was late, it was I wanted to go somewhere. I took risk entry. This entry is good because it protects all your profits. So currently I'm here, so this is what I'm targeting. I'm targeting a 1 to 6. This is one of them. Now this one I came back and I found it, so I also took it. This one now, this is an example of one that is so big, so the stop loss I can't just be there. So I'm also in this one. I don't like the way they are moving, but it's okay. I'm somewhere here almost at BE, so it's okay. So let's just check on the one UJ. So the trade took place on 23rd. So let's start the process from start to finish. By the way, you can join the Telegram group, it's free. So we don't trade the market when it is ranging like this. We don't do that. Now this is the day trading strategy. Let me delete it. These are the checklists I use all the time. So this step number 1 is to identify the trend of the market. So on this day, as you can see, the trend of the market was bullish. This was a buying market. We don't bother about this because this happened a long time ago. If we are here, we just look at this trend. Now if it is this, we don't consider this a bullish trend. We only consider a bullish a trend after forming 3 candles in a row like this. This is 1, 2, 3. Now we know we are back to selling. So when this closed here, we needed to look for sells. Now the same strategy applies this side. So when this closed here in a bullish market, we needed to look for sells. So trending direction, trending daily direction, daily time frame direction, close in opposite direction. So as you can see, this is a buying market, and then all of a sudden it closed bearish. We did not buy here because the market had not fully managed to go bullish. Otherwise it equally worked. As you can see, the market bought immediately. This closed downwards, closed bearish, this bought immediately. But we didn't do that because it is low probability. The same thing could have happened here. It would have gone upward, but it is low probability. So in long run, we'll be affected the most. So even here, we did not sell here when the market closed here because it's low probability. The best one was here, and as you can see, it sold and then it gave very good move that it was good for holding. At the same time, it came back here again, closed very good trades, and then now it started now ranging. This now started to be low probability. This was low probability. As much as it gave trade, this was low probability. So let's focus on this one. This is extremely high probability. So checklist number 1 ticked, high probability. Now we go to 4 hours. Now we go to 4 hours and wait for alignments. Alignment means it has started taking the highs or the lows of the candles next to it in my direction. So like in this case, I'm expecting to start taking candles in up direction. So what does it do? It takes candles in high. So you can see from the previous candle, if we zoom in, this is the last candle and immediately it took it. This is the following day. So this is the first candle and this is the last candle, and as you can see, its high has already been raided, and that is just good confirmation that now we are back to being bullish again. So as much as it has closed on the downward side, it would have only been invalid if this low had also taken the low of this and closed downwards, closed bearish. If it closed bullish, it's still okay even if it takes both the high and the low, but only if it closes bullish and takes both high and low. But if it takes, those ones are the unwritten rules that I don't write here. If it takes these other candles high, and then but still closes in, it only means that it was good for pullback and it provided direct entry. Like if you wanted to get a direct entry, it's called risk entry, the one like I took today on AUD card. This is called risk entry. You just take it on 4 hours. So stop loss should not be this, the immediate candle. The stop loss should be this candle is up there, so we won't use it. We can use this, so we can just place it somewhere here for 15 pips and target this. That would have given given more trade, more opportunities, but this would be so small. This could easily be wicked out, so maybe give it room 20. It's okay. 1 to 8 is okay. So then you're willing to hold for long, so you can go about your day. This is at 4 a.m. my time, because I wake up at 4 a.m. but still you can still get entries at continuation entry, though they are not. I don't like continuation entry. So as you can see, the market came and nearly stopped some. So it depends whether you place your stop loss, but the ideal stop loss should have been here. Here is the best, because this would be liquidated. These ones are all liquidities, they can be liquidated, and as you can see, they were liquidated, but still trade gave even more than a 1 to 8 eventually if you are holding. So once you study the market one candle by candle, you will only understand and make your trading easy. This strategy is coined from SMC. That is why I trade. If you ask me to explain all these things that are just happening here based on SMC, I can tell you that what is happening here is that we had a break of structure upward here. This was a pullback and then a break of structure upwards, and then now we had again a liquidation. And then if you trace the law of this becomes an IDM or inducement. These are the logics. So when this was the inducement, this is 4 hours inducement. So when 4 hours inducement happened, what did it do? It tapped onto an IFC candle, or if you go to 1 hour or 30 minutes, you're going to find that there was a demand zone somewhere there. These ones are the logic behind the reason why this thing is summarized like this, so that I don't focus so much onto all this. It gives me analysis paralysis and waiting so much. That is why I rather just wait for a candle to close on the opposite direction, like something that happened like you can see here. This is just tapped on demand zone. So this is base rally, then a retrace, then a rally. So that is the reason why I'm expecting it to buy. So these ones are just liquidity build-ups. So it has already tapped on this. This is just liquidity build-up. So what we do next is we go to, let me delete these other ones. They are not important in this strategy. You don't need to know those ones, but it's just good if somebody asks you, so that you have the logic and the reason why we are looking at trade at that particular level. So this becomes the alignment, the 4 hours alignment. First 4 hour aligning confirmed. So now that is high probability. Next we go to first 30 minutes V-shaped aggressive manipulation and wicks. So we go to 30 minutes to look for wicks, especially the wicks after a push down, and then after that week we will look for a bullish candle in 30 minutes. That is what the entry is, but the entry is not yet. So we look for first V-shape aggressive manipulation and wicks in this direction, the manipulation. So let's see. Now immediately starts by taking the high, which is always high probability. When candle takes the high of the previous one, it's always very good and high probability. So let's wait for manipulation. So you can see that it has started pulling down, and then it pulls even down further, but again you see it leaves us a nice wick, which shows that 4 hours is done pulling back. So let's wait for the first 30 minutes to be formed, because now we are into the entry. 30 minutes full body closure, so it will be having 15 minutes scope, but that is not a must. As you can see, we get a full body closure, and that is our entry at 5:30 a.m. my time. We check your time, Kenyan time. So stop loss there about, so give it 25 pips. It is nice. Get your 1 to 6 somewhere there, 1 to 6. So, or you can just hold it to full max profit, or you can expect that, but you will be trailing it so that you can get your profits in the same day. So as you can see, this is maximum of 1 to 6 already locked if you used 25 pips stop loss, but if you took it here 30 pips stop loss, this is 1 to 5, which is still okay. So you can also equally hold it to max, but if I'm holding it to max, I would have wished to get at least a 1 to 6 if that is the stop loss I used, or even a 1 to 7. So I would just let it play and hold for some 2 to 3 days, because this is a swing strategy. You can hold for a little bit longer, provided it gives you, it doesn't stop you out at break even, but at this particular point you'd be at break even. And as you can see, 1 to 6 was reached. Now SL few pips above or below that had already explained, and then TP above or below previous high or low of the daily candle. This is the high of the daily, so this is where your TP should be. And then risk management is to target at least a 1 to 4. If you're targeting a 1 to 4, you worked out with somewhere here, or even a 1 to 5, it's okay, 1 to 5. And then for psychology, we look to take such similar trades 10 times and then let the favor work on our side, because the rule is very simple. If this analysis is right, it will always play out regardless. So we should reduce our expectations of the trade going upward, because this is the smallest distance it can take according to vector, and that is the reason why we should lower our expectations of the market. So that is how the trade played out.